Seal the main hatches, pressurize the command deck, and dim the bridge to strictly tactical red lighting. Welcome aboard, navigators. We are currently operating at maximum crush depth in the absolute darkest trenches of the global financial ocean. The operation file transmitted to our terminal today is designated Breaking XRP Momentum is Building. Crypto traders watching this closely. And if you are staring at your superficial surface level monitors, you are entirely blind to the massive hydrodynamic shifts occurring right beneath the waves. Up on the surface, the civilian retail traders are desperately treading water in a terrifying macroeconomic storm, completely panicked by the spot price hovering around the $1.38 metric. They feel the agonizing atmospheric pressure, assume the vessel is catastrophically imploding, and abandon ship right into the freezing waters of the fiat currency abyss. But down here on the sonar deck, my acoustic arrays are picking up a completely different reality. We are detecting massive rhythmic anomalies echoing through the abyssal plane. The momentum is not just building, it is geometrically multiplying. The civilian traders claim they are watching this closely, but they are looking at meaningless foam on the ocean surface. Our deepwater hydrophones have successfully isolated the unmistakable acoustic signatures of apex financial leviathans silently mobilizing their capital reserves. They are utilizing the perpetual futures markets to artificially project a massive downward current, creating an engineered undertow that drags the weak hands directly into their gaping jaws. This is a highly calculated predatory maneuver. When the market makers aggressively short the public exchanges, they fabricate an impenetrable ceiling of pressure that psychologically breaks the over-leveraged retail day traders. The moment those traders hit their stop-loss limits and jettison their physical digital assets, the institutional submarines quietly glide through the wreckage and absorb every single discarded token. You have survived the grueling descent through years of regulatory darkness and absolute freezing market winters. Do not let this manufactured pressure differential compromise your psychological hull integrity. The moment you eject your cryptographic cargo at these suppressed levels, you are feeding the exact sovereign entities that engineered the storm. We are detecting a monumental shift in the oceanic currents. Maintain your absolute depth discipline. The momentum is undeniable. Let us recalibrate the forward sonar arrays and sweep the highly classified institutional dark pools currently operating at the absolute bottom of the financial trench. The surface-dwelling financial broadcasters are desperately transmitting a false narrative, claiming that institutional capital has completely evaporated due to the rising geopolitical temperatures and the turbulence of the macroeconomic weather. That is a deliberate acoustic decoy designed to mask the largest physical accumulation phase in modern oceanic history. If we bypass their jamming signals and directly audit the telemetry from the United States Spot Exchange traded funds, a glaring anomaly illuminates the radar. The sovereign financial leviathans commanding these heavily armored investment vehicles, entities like Bitwise, Canary, and Franklin Templeton, have quietly accumulated a massive stockpile of over $1.3 billion in physical XRP. How is it physically possible for over $1 billion of pure displacement to enter the ecosystem without violently forcing the spot price to breach the surface? The answer lies in the impenetrable shadows of over-the-counter dark pools. These massive asset managers are not executing their multi-billion-dollar acquisition orders in the public, sunlit waters, because doing so would instantly trigger a massive hydrodynamic shockwave and completely ruin their covert accumulation strategy. Instead, they are utilizing localized liquidity providers to systematically absorb the discarded tokens of every panicked retail investor who succumbs to the crushing depth. To perfectly camouflage this massive resource grab, those same liquidity entities aggressively short the public futures markets. By driving the funding rates into negative territory, they manufacture a highly convincing illusion of a brutal, unending abyssal descent. The civilian sector looks at those metrics and assumes the asset is actively sinking into the mud, while the institutional cartels are literally deploying robotic submersibles to secure the floating supply at a steep wholesale discount. They are locking up the physical float inside deep cold storage vaults. Furthermore, you must synthesize this dark pool telemetry with the explosive scaling of the RLUSD stablecoin infrastructure. The RLUSD network capitalization has aggressively expanded past the $1.5 billion threshold. The legacy banking submarines are hardwiring their cross-border liquidity operations directly into the Ripple framework. The mechanical burn rate is actively accelerating on a massive global scale. We must now adjust our periscope depth and scan the international horizons, because the hydrodynamic momentum triggering this massive reaction originates far beyond the domestic territorial waters of the United States. A seasoned abyssal navigator understands that true systemic ocean currents are always generated on a global geopolitical scale. While the civilian sector is completely mesmerized by the minor fluctuations on their mobile trading applications, our international acoustic sensors have intercepted critical dispatches from the highest echelons of European and Asian naval finance. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the mighty Depository Trust and Clearing Corporation. That precise maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement machinery. But the new sonar intelligence that confirms the massive building momentum is an unprecedented European convergence. We have empirically verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global displacement, has officially activated its MiCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational propulsion systems to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume. The sudden momentum spikes are the market algorithms violently attempting to price in this massive international adoption before the retail sector realizes the tide has completely turned. The legacy financial system is actively taking on water, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic bulkheads on a global scale. The corporate media is actively deploying acoustic countermeasures, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. They want the civilian traders to abandon ship during these brief moments of volatility so the sovereign banking cartels can monopolize the ultimate global settlement ocean. Trust the deep water sonar. The momentum is absolute. Prepare to blow the main ballast tanks and initiate the final surfacing protocol, because recognizing the sovereign manipulation and the structural causes behind this building momentum is absolutely useless without a highly regimented extraction strategy. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC systemic integration, and the colossal international banking deployments. So, what is the ultimate mathematical destination of this digital asset when the algorithmic pressure is permanently equalized? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative navigators at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical cycle. To the uninitiated civilian sailor, currently psychologically traumatized by months of artificial crushing depth, an $8 projection sounds like impossible science fiction, but to the elite commander who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and panic are the ultimate vulnerabilities in any deep-sea operation. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation from the legacy fiat ocean. The final tertiary portion must be securely encrypted and locked in deep cold storage for the ultimate long-term macro play, anticipating the network's final integration as the undisputed bedrock of global settlement. Secure your private cryptographic keys offline immediately. The legacy institutions are deploying sophisticated phishing malware designed to completely drain vulnerable retail wallets right before the structural breakout occurs. Trust the raw immutable blockchain intelligence, execute your surfacing strategy flawlessly, and successfully complete the mission.